Hello, today is Sunday, the 3rd of June, 2012. I want to go do a quick technical analysis video on gold. This is a yearly chart with each period representing one calendar year. If you're interested why nothing happened here, what occurred on this up move and all through this move in here, then please tune into yesterday's video by watching the history timeline from 1792 to 2011 to explain further. Within this, there was a descending triangle. What's important to note is that if it's coming from an uptrend like you see here, then it's actually more of a bullish setup, and until it has a clear breakdown below this, then there's no reason to be bearish at all, and it's very common to have that little breakout, or breakdown, excuse me, before the big move higher, and we've had many consecutive years in a row with up gains, hugging this upper band, and for the year it's up 57.60, and it was down at the start of Friday, as on the monthly chart, which was the start of Friday, it was up 63.5. Obviously, nothing more than a consistent uptrend with a few consolidations along the way, and of course, we're going through one right now. And you can even see a little bit of a descending triangle on here. And if we shorten this out to the weekly time frame, we can see it a little bit better, as we can connect the straight line here, we can connect the downtrend line as well. It's also coming from an uptrend line as well, making it not a bearish situation. However, if it has a clear breakdown below here, most likely a test of the low 1400s, mid 13 to high 13, around 1350 to 1400 as the next test. And as long as it breaks above this line in here, then that will show that the selling from point A to point B would be a failed move and most likely have some significant gains. So we switch this up to the daily chart. We had the significant gain yesterday, which manages to come up to this line in here, which is a significant line that was once support. Oftentimes, that these big moves can result into the end at the start of a bull market, just like this red candle started a bear market. Of course, you want to take a look at the Fibonacci from point A to point B, this being point A. We'll take a look at that in a little bit on the 5-hour chart. But if it does something like this, then it does look as if the descending triangle is going to break to the downside and we'll have further down moves. And if this area is not resistance, look for this area to be such, and so on. Let's now move on to the 5-hour chart. We'll look at Fibonacci from this breakdown high. And within this, let me just bring the chart up. Here we go. There was no resistance in here. There was no resistance in here, showing that the chances might be likely that the last selling was a failed move. And if we take a look at that again on the daily chart, this could potentially be a failed breakdown, and oftentimes from failed moves does create fast moves in the opposite direction. Thank you for tuning in and have yourself a magnificent day. And yeah, just again, final thing, the important thing will be Fibonacci from this low to this high. For if it really has a hard time holding anywhere happens to be 61.8% retracement, then there'll be more further downside room left. Take care.